Hello, and welcome to myfinanceteacher.org. In this video, I'm going to look at two largest gold miners in the world, and those are, of course, Newmont Gold and Barrick Gold. The question is, are they still a good investment after a significant price appreciation over the recent months? For similar analysis, why not join us at myfinanceteacher.org, where I discuss a range of assets. Going into the valuation here, these are the factors that I'm looking at. Generally, I'm looking at per share discounted value of gold and silver reserves in the ground after production costs and after debts. And I throw in some insider shares here, as insiders might turn out to be strong hands, which might help the share price. Now, let's go through these valuation factors one by one. Starting with gold and silver prices. By the way, today is 16th of November. So today I will post this video for members at myfinanceteacher.org. And this video will also become publicly available for the viewers on YouTube 1 or 2 weeks later, possibly when the price of NEM and gold is already higher. So for timely updates, join us by clicking this register button. Now, coming back to the prices, I'm going to look at three scenarios here. Our balanced scenario actually includes the price that is 2% below the current spot price. That gives me $18.52 for gold and $24.20 for silver. In the conservative valuation, I'm going to reduce the balanced price by another 10%, bringing the price of gold down to $16.67 and $21.8 for silver. And for optimistic valuation, I'm only going to increase the balanced price by 10%. Bringing us to $20.37 on gold and $26.6 on silver. The thing is, I think in the next 2 to 3 years, there is a great opportunity for gold price to increase much further beyond this optimistic price of a meager $20.37. So even the optimistic scenario within this valuation is more leaning towards the conservative side, where we try to avoid buying any overpriced assets. Next, looking at proven and probable reserves in the ground for both Newmont and Barrick Gold. For gold, we have nearly 100 million ounces of proven and probable reserves of gold for NEM. If you actually look at quarterly reports from Newmont Mining, you will see that they report 100 million ounces. But what I do is I subtract the production in 2020 so far, again, leaning a little bit more towards the conservative side of the valuation. For Barrick, we have nearly 70 million ounces of proven and probable reserves of gold. For silver, we have over 650 million ounces of proven and probable reserves of silver in the reserves of Newmont Mining. And for Barrick Gold, we have around 140 million ounces of proven and probable reserves of silver. So you see that in terms of proven and probable reserves, Newmont is a little bit ahead of Barrick. Moving on to measured and indicated resources, the situation here is reversed, where NEM has nearly 80 million ounces in measured and indicated resources of gold, while Barrick has nearly 170 million ounces of measured and indicated resources. For silver, NEM has nearly 500 million ounces, while Barrick has nearly 900 million ounces of measured and indicated resources of silver. So as proven and probable reserves are a little bit more certain than measured and indicated resources, investing in Barrick, I would suggest, is maybe marginally a little bit more on the risky side, with a tremendous potential, as you see, with very large measured and indicated resources. Next, looking at the all-in sustaining costs of extracting that gold out of the ground. According to the 2020 guideline in the Q3 report so far, all-in sustaining costs for NEM is $1,015 per ounce, and for Barrick Gold, it's about $945 per ounce. Unfortunately, neither of the companies report their all-in sustaining costs of extracting silver, so what I'm going to do in this case is I'm just going to use a gold-silver ratio of 80. In reality, the ongoing gold-silver ratio is somewhat below 80, so if I instead use a gold-silver ratio of 80, that actually artificially suppresses the value of silver reserves that the companies have, again, leaning into conservative side of the valuation in general. Next, moving on to long-term debts. Newmont has just over $6 billion in long-term debts, while Barrick has just over $5 billion in long-term debt. In my valuation model, I don't actually include dividends, but while I have space on this page, let's throw them in as well. Forward dividend on NEM is actually pretty interesting at $1.6, and for Barrick it's nearly 40 cents per year. Next, looking at number of shares outstanding, we have around 800 million shares for NEM and about 1.8 billion shares for Barrick Gold. Here I also look at the percentage of shares held by insiders, and that's nearly 0.3% for Newmont and just over 0.5% for Barrick Gold. So these percentages are not impressively high, of course. It would be nice to see insiders hold a larger percentage of the company, but these are large companies and you wouldn't expect the insiders to hold a large chunk of a very big company. Next, looking at the time value of money, as it will take time to extract those reserves out of the ground, I'm going to use a discount rate of 5% for both companies, and in terms of time, I'm going to look at how long it will generally take in years to extract the proven and probable reserves. For Newmont, that's around 16 years, and for Barrick, that's about 14 years, so not a huge difference here. And if you include half of measured and indicated resources in addition to the proven and probable reserves, the time to extract all of those reserves and resources will be something like 23 years for Newmont and something like 32 years for Barrick. Again, we see from this picture that although Newmont has more of certain proven and probable reserves, Barrick actually has more of slightly less uncertain measured and indicated resources. Now let's put all of those numbers into our valuation model, starting with the conservative valuation. Reminder, for this conservative valuation, I'm going to use a gold price of $16.67, silver price of 21.8, and we're only evaluating the proven and probable reserves that the company has in the ground, meaning that we just assume that there is nothing else left in the ground, again suppressing the actual valuation and avoiding a purchase of any overvalued assets. So for conservative valuation, we have $65.44 for Newmont Mining and $21.88 for Barrick Gold. These conservative valuations are actually a little bit over the market price. Last week on Friday, Newmont closed at $65.71. That's about 1% higher than the conservative valuation. And Barrick closed at $25.89. That's about 15% higher than the conservative valuation. So if over the next few years, say gold doesn't really do well and average somewhere around 1667, our conservative valuation would be an estimate of somewhat of a fair value of the reserves in the ground. And this overvaluation figure would show you that the risks are quite smaller with Newmont as opposed to with Barrick Gold. Next, let's move on to our balanced valuation, where we plug the gold price of 1852, silver price of 24.2, and still we only look at proven and probable reserves in the ground. For balanced valuation, we have $85.80 for Newmont Mining, which is considerably higher than the market price of $65.71. That's actually nearly 31% above the market price. And for Barrick Gold, we have $28.13 of balanced valuation, which is around 9% above the market price of $25.89. So again, looking at just the proven and probable reserves, Newmont Mining seems to be a little bit more of an interesting asset here compared to Barrick. Next, let's look at optimistic valuation, where we plug the gold price of $20.37 and the silver price of 26.6. And here in this valuation, in this optimistic scenario, in addition to proven and probable reserves, we also include only half of measured and indicated resources in the ground. And that gives us an optimistic valuation for Newmont of over $140 per share and over $70 per share for Barrick. That's actually just under 120% undervaluation for NEM and around 170% undervaluation for Barrick. So again, if you do include some of the measured and indicated resources in addition to the proven and probable reserves, Barrick becomes kind of interesting. Next, let's look at some highlights. For NEM, an interesting thing to point out is that Newmont Mining pays 2.4% in dividends. It's not amazing as some of the oil and gas companies pay, but it's better than what, let's say, Barrick Gold pays, which is somewhere around 1.3% in dividends. And another important thing is that Newmont Mining also produces a range of base metals such as copper, lead, and zinc. And this production wasn't actually included in our valuation. So over the next few years, if metals, say precious metals or base metals, shoot up in their prices, I don't know, say because of the money printing, then the upside potential is possibly even much better than what's presented in our optimistic valuation. Next, for Barrick Gold, an interesting thing to point out is that a feasibility study on their ongoing exploration at Gold Rush in Nevada is coming up in the first quarter of next year. So if the results are pretty interesting there, that also can be a catalyst for a nice push up in Barrick. So let's keep our ears open for that. And another thing is also Barrick produces copper, which also would potentially reduce your downside risk with Barrick and increase your upside risk if base metals do well alongside, say, precious metals. And for analysis of a range of other assets, as you see I post pretty frequently at myfinancesteacher.org, why not join us by clicking this register button at the home page? For example, among our recent successes, we've been quite lucky to enter near the bottom on our energy trade, and we've been quite lucky with our trade on coffee, where we also entered pretty close to the bottom a couple of weeks ago. Besides that, we've entered Bitcoin at around 11,000 or so, and over the last few days we've been gradually unloading some of our positions. So for timely updates on a range of assets, join us at myfinancesteacher.org. For now, I wish you a wonderful day and good luck in your trades.